Welcome everyone to today's Explainer. I'm absolutely thrilled to have you here. Look, if you're searching for a clear, level-based roadmap to navigate what is shaping up to be a highly anticipated and, quite frankly, pretty volatile market session today, July 13th, well, you're in exactly the right place. Today, we're going to completely filter out the noise. We're focusing strictly on the data, the technical support levels for the Sensex, and the charts to get you fully prepped for the opening bell.
So, here's our game plan for today. We're covering 1. Global tensions and oil, 2. Market opening predictions, 3. Sensex technical support levels, 4. Nifty 50 technical outlook, 5. Bank Nifty crucial zones, and finally, 6. The trading strategy for today.
All right, Section 1. Global tensions and oil. The weekend shock.
Okay, so over the weekend, we saw a sudden, major escalation in the US-Iran conflict. Now you might be wondering, why does this matter so much to our markets right this second? Well, it all comes down to the uncertainty over the Strait of Hormuz. You see, this is a massively crucial shipping route. It literally carries about 1/5 of the entire world's oil. When a global choke point like that is suddenly threatened, it spreads like wildfire, sparking intense inflation fears, disrupting global markets, and instantly putting traders everywhere on incredibly high alert.
And we're already seeing the immediate economic fallout from that conflict. Brent crude futures surged by 3.5%, hitting $78.67 a barrel, so it's pushing right up toward that key $79 mark. U.S. West Texas Intermediate crude jumped in exactly the same way. Now, in the stock market, rapidly rising oil prices almost always translate directly into inflation anxieties, right? Which is exactly why global equities, including U.S. futures, took a pretty sharp dip in early trade.
Moving on to Section 2, Market Opening Predictions, a gap-down start.
Unsurprisingly, the early indicators are flashing bright red. The GIFT Nifty was trading right around the 24,034 level. To put that in perspective, that is a discount of nearly 207 points from the Nifty futures previous close. Because of this massive drag, the Sensex is actually expected to open about 250 points lower. So we are staring down a massive gap-down start that is absolutely going to test traders' nerves right out of the gate today.
And guys, just think about this sheer whiplash in sentiment here. I mean, remember Friday? We saw this incredible roaring euphoria with a broad-based rally across pretty much all sectors. The Sensex surged a massive 827 points to close at 77,569. The Nifty comfortably reclaimed the 24,200 level. It was great. But today, traders are waking up to the very sobering reality of this predicted gap down. The mood has totally flipped overnight.
Which brings us to Section 3, Sensex Technical Support Levels, Navigating the Drop.
In highly volatile times like these, we absolutely cannot trade on emotion. We have to rely strictly on the data. Amol Athawale, the VP of Technical Research at Kotak Securities, actually hit the nail on the head with this. He pointed out that the short-term market texture right now is extremely volatile and non-directional. Basically, guessing the trend today is a dangerous game. Instead, level-based trading, knowing your exact mathematical safety nets and ceilings, is for sure the ideal strategy.
So let's get into the nitty-gritty, the core Sensex technical support levels you need to write down right now. According to the charts, our immediate rock-solid support zone on the downside is exactly at 77,000. That perfectly aligns with the 20-day simple moving average. As long as the Sensex can sustain above that 77,000 mark, the broader uptrend is likely totally fine. But if that floor breaks, the index could easily slide down to retest 76,100, which is the 50-day SMA. Below that, we're staring at the 75,500 to 600 zone. Now, on the flip side, if the bulls manage to fight back, your resistance sits at 78,000, stretching all the way up to 78,700. Seriously, keep these levels handy.
Okay, Section 4, Nifty 50 Technical Outlook, Signs of Indecision. When we dig into the Nifty 50 and break down the technical candlestick patterns, it basically tells a story of a massive tug-of-war. On the weekly chart, the Nifty formed a doji-like candlestick. For those who follow technicals, you know that's a classic sign of indecision in a sideways market. But, and this is a big but, if you zoom in on the daily chart, a really reasonable bull candle formed with a gap-up opening that actually remained unfilled. That is a very strong signal of a bullish comeback following last week's steep fall. In fact, according to Nagaraj Shetty at HDFC Securities, despite the chaos, the underlying short-term trend actually remains positive thanks to these daily bounce-back patterns. So where are the lines drawn in the sand for the Nifty? Right now, we're definitely in a sideways consolidation phase. Your immediate crucial support zone is sitting at 24,000 flat, followed by a safety net at 23,800. Looking upward, 24,350 is your very first hurdle. But the real boss level resistance, the one you really want to watch, is that major area between 24,500 and 24,600. A decisive, strong breakout above that specific zone could absolutely trigger a fresh rally toward that massive psychological milestone of 25,000.
Next up, Section 5. Bank Nifty Crucial Zones. Bulls regaining control?
Bank Nifty actually showed some remarkable strength on Friday, surging nearly 800 points. And the tactical checklist here is pretty fascinating. On the weekly chart, it formed what's known as a dragonfly doji pattern. This is a big deal because it reflects very strong buying interest at lower levels. It essentially shows us that the bulls are steadily regaining control. Plus, it's trading comfortably above its key moving averages, which all have a nice, positive upward slope. And if we look at momentum, the Daily Relative Strength Index, or RSI, is literally on the verge of crossing the 60 mark. That's a textbook signal of improving bullish momentum. Buyers are clearly eager to step in here.
So, for all you Bank Nifty traders out there, here is your battlefield for today. Your immediate hurdle, the heavy ceiling you need to break, is the 58,600 zone. If we manage a sustained breakout above that, it really paves the way for a nice rally toward 59,200. But given the gap down, if global pressures drag it down today, you need to watch the 57,300 to 57,400 zone. That critical area coincides with the 20-day exponential moving average, and it's expected to act as very strong support to keep this whole broader bullish structure intact.
Finally, Section 6, Trading Strategy for Today, Level-Based Discipline.
Let's wrap this all up into a totally concrete, actionable roadmap for your session today. 4 simple steps. Step 1. Anticipate and just accept the gap-down opening. Don't panic. We know it's driven by global oil and geopolitical shockwaves. Step 2. Immediately identify your index's key support level. If you're trading the Sensex, you watch that 77,000 level like a hawk. Step 3. Rely on the experts. Dr. Ravi Singh advises that a buy-on-dip strategy actually remains preferred today, but only as long as key supports hold. For example, he points out this works for Bank Nifty as long as it sustains above 56,500. And Step 4. Execute strict level-based trades. If a support breaks, respect the data, cut your losses, and simply wait for the next level. No emotions, just execution.
And that leaves us with the ultimate question for today's high-stakes session. Will the domestic bulls step up to the plate and aggressively defend these crucial technical support levels? Or will the sheer weight of global geopolitical pressures and surging oil prices finally break the short-term trend? It's going to be an absolutely epic battle today between local optimism and global anxiety. Keep your levels handy, stick to your discipline, and trade safely out there. Thanks so much for joining me on this explainer, and I will see you next time.